it's a great pleasure for me to somehow try to explain why the guys on the continent are somehow a little bit different, not only in terms of driving, but also in terms of accounting. And as you might see very, very shortly, I took somehow Germany, as David did it with his myth. He took UK as a comparative country. I just took Germany because and try to explain the German situation of SME accounting, because first of all, I know Germany the best. Yeah, it's always difficult to speak about other systems not being in this system. And secondly, as you know, everybody of you who has already dealt with international accounting questions and comparisons, Germany is always taken as the role model for this continental European accounting perspective. So my agenda today is quite short, but perhaps the presentation won't be that short, but so I will be happy that you made a mistake and gave us 30 more minutes. I won't take all the 30. I had a problem with this first wording here. German accounting and the IFRS for SMEs are troublesome. I just wanted to say a conflicting relationship, troublesome relationship, a problematic relationship. So this is something which is always difficult for a non-native speaker to really find the right word. The issue is that nobody in Germany likes the IFRS for SMEs. So they always have been very, very contrary, very, very much against it. And just in order to blame the Germans, I would like to give you some hints, some ideas, some reasons why this has been the case and why it, I'm pretty sure, will be the case also in the future. I've put quite a bit of information on my slides because I'm convinced that if you take the slides home, you will get much more out of the slides in 2, 3, or 4 weeks' time than just if I just have used keywords. So I have 4 or 5 facts that really show this problematic relationship of the German accounting and constituencies, people dealing with German accounting, and the IFRS for SMEs. So participation of German accounting constituencies in this consultation of the European Commission. This really was also astonishing to me. There were 41%, so 84 German comment letters. The next most country with the most comment letters was Austria, which is quite comparable in the thinking about accounting, and then came with 9 the UK. This is already a very strong indication that the Germans really tried to build up a wall somehow against this discussion, because they have been very afraid that this could come somehow into their holy grail of accounting. The answers, so if you look at the answers, one of the, this is just, there are just 2 examples. Do you think that the IFRS for SMEs is suitable for widespread use within Europe? 93% that no. If you are users, even users of accounts, the banks, and so they said, we don't think that this will really be good for us, that we will benefit from them. Then even the German government somehow reacted to this discussion, and they have developed a revision act and said, we can do it better. We know that our accounting system is somehow a little bit old-fashioned, but we will modernize our accounting system, and that's the reason why this revision act was called Accounting Modernization Act, translated literally. And they said, we make a step forward and we get rid of all the problematic issues we think that we can get rid of, and then we are even faster than this movement of the IASB. And they really argue like that. They explain it like that. They say, we would like to give a better, a more applicable, more useful alternative to our SMEs than the IASB can do. It even has caused a crisis at the German standard setting body. We do have a standard setter since 1998, But the standard setter only has got authority to put forward standards for consolidated accounts. So not for single accounts. All their standards are only for consolidated accounts. And they, nevertheless, they have dealt very intensively with this discussion on the IFRS for SMEs. We even had the chance to do some research projects with them together, and they were somehow very favorable. So Liesl Knorr, she always tried to explain to the Germans that this is not just the devil. It could be somehow, even for German companies, have some positive aspects. But really, this standard setter almost failed. And one of the arguments was they were too favorable. They participated too positively in this discussion. And even now, everybody knows already that the Germans are very, very reluctant with regard to this IFRS for SMEs. There were nevertheless now still 7 comment letters on the discussion out of 52. This also proved that they still have somehow a conflict with the standards and the kind of fear that this might nevertheless come into the German system. Now, what are the major, over the academic literature? We have a very, very long tradition in normative, deductive research. Not that much empirical, but really trying to build up concepts of accounting and then derive rules out of those concepts. So a very conceptual issue. And you see, this discussion can't be followed by non-Germans. It might sometimes be quite useful because it gives all the non-continental Europeans a different perspective of accounting. But all this literature is in German because we are convinced that nobody else would be interested in this stuff, so we don't do all the translation and struggling with the foreign language. Well, these were the major arguments, and here comes up some of the myth of David Kent. So fair value measurement. No fair value measurement. And there's also quite a bit of Germans who say the IFRS is fair value accounting. If you compare it to German accounting, it is fair value accounting because there's at least a bit of fair value in there. In Germany, we don't have any. Yeah, above historical cost. Beneath historical cost, yes. So multi-measure concept. So that they haven't dealt with capital maintenance issue. What is the capital maintenance concept of IFRS? This is something a lot of German academics say you can't rely on an accounting concept if you really tell you what is the issue of capital maintenance. Whether you have got financial or whether you have got physical, it's a whole mess. Too much judgment, complexity of standards. You might know all of these type of arguments. Also too many disclosures. Yeah, a competitive issue. So the Americans, they don't have any accounting standards for SMEs. They don't disclose anything in the SME field. Why should we give so many disclosures to the international market? Or as I said already, this is a typical German argument, the simply structured business models of SMEs. So if you give too many disclosures, then you are somehow inviting your competitors to take your business model and also profit out of this information. And one of the strongest arguments, and I try to now continue with my explanations with this argument, specifications of national economies and legal environment are not taken into account. And this is the strongest argument in the German area, and this is why I try to explain to you now a little bit what are those specifications in this German environment of accounting. I don't want to do a long historical review, not at all. I try to explain to you the major pillars, characteristics of accounting in Germany. So we all know those cultural factual classifications built somehow on Hofstede's characteristics and Sid Gray in 1988. It was 1989, I think I made a mistake here, I guess. He said that those cultural issues really have a strong impact on accounting values. And if you take those 4 values put forward, developed, and stated by Sid Gray, statutory control, conservatism, uniformity, secrecy, instead of. All those 4 values are absolutely against IFRS for SMEs. Even so, you say there's still prudence in there. But I will show you that it's not enough prudence for a particular point of view. Yeah? So this is already taking those accounting values. IFRS is conflicting. Cold law culture. Accounting is a matter of law. Not only in Germany, it's the same in, at least traditionally spoken, in France, in Italy, in Spain, and so on. So a lot of lawyers also participate in the discussion whether accounting rules are appropriate or not appropriate, and so on. So this is also the reason why we have a very short tradition of a private standard setter, why we don't understand that much this discussion of true and fair view, yeah? Because we just say it should be somehow in the law. It's a deductive approach, and if those guys who develop the law take their job seriously, then, yeah, that's it. And we all know that we really can't present true financial statements because nobody of us really know what is that, a true financial statement. So, strong argument in Germany, IFRS lacks legitimacy. They don't have any legitimacy. Yeah, so at least the guys at the parliament, they have a legitimacy for 4 or 5 years to decide they don't care that much whether those guys know anything about accounting, but they are elected by people in the country. So income taxation, I think this is already known by everybody here, so quite strong traditionally. It's getting looser and looser and looser. And primary source of finance. So this issue of shareholder information is not something that has been developed in the German accounting environment. Although the German economy always has been very, very strong, it's still especially in the Mittelstand, in the SMEs area, it's still very strong debt financing, or large families who get that much money that they don't care about bank financing, still nowadays. Yeah, and take for example BMW. It's somehow an interesting example. It's a stock corporation, but I think 45% of BMW is still owned by the family of the founder. Yep. So this is really still one of the major, I would say, power in the German economic system, that there are still quite strong family businesses. So what are the major, if you just put it in a nutshell, the major characteristics of accounting in Germany? It's creditor protection. It's not shareholder information or shareholder protection, it's creditor protection. And now we can make up the discussion whether information also protects creditor and or shareholders. But the major thing is that out of this, and also knowing that there are investors, that there's a very strong impact of the employees also on the corporate governance level. Larger companies also have a very strong representative, have representatives of the employees on the board, and large companies, those are 50%. So if you tell this to Americans, they say this is pure communism. 50% of the board are representatives of the employees. And then material importance, and this is also something I got the experience and impression that is not very well understood and perceived by non-continental European people, researchers, professionals, that we still differentiate very strongly between individual accounts, single accounts, and consolidated accounts. Because we do have, this multifunctionality, we do have information function, we do have this function of safeguarding the capital maintenance, and here the prudence principle comes in, and connected to this we have the function of tax computation. But if you look at the information function, and this is something which has been discussed at least a little bit with relation to this micro directive, self-information of the owner. Though the legislator also tries to explain and to justify why every legal entity in Germany has to present financial statements. Also partnerships, sole proprietorships, every legal entity must present financial statements, because the state thinks that this is somehow the responsibility of the state for the companies, that they should have at least a kind of information system. So stewardship and information to all stakeholders. And it's not at all, consequently, a focus on the investors. It's a bunch of users of financial statements that are into focus. And this information function is the only function of the consolidated statement. So the consolidated statements have the function to inform. However, the single accounts, they also have got this information function, but primarily the function to calculate a disbursable income. And this question, what is disbursable, is answered by this prudence principle. So you only may disburse something to the owners, and this is creditor protection, if this is, again, realized increase of net assets. And that's the reason why this interpretation of the realization principle is very conservative in Germany. That we don't have, for example, a percentage of completion method. That we don't have fair values for financial instruments. Even marketable ones, they are still accounted for at historical cost, because it's unrealized income. It has been, though the risks and rewards have not been transferred to the other party, as long as you have the financial instruments on your books. And then also tax computation. And this, traditionally spoken, is the strongest, really the strongest function. And this is also the reason why even publicly traded companies, parent companies, for their single accounts, they still have to use German GAAP. They are not allowed to use IFRS. They are only forced to use IFRS for their consolidated accounts. And this is, I would say, something really very, very special, very particular for continental European, generally spoken, especially for German accounting. And there you see this conflicts, everything conflicts with IFRS for SMEs. Why? Because even the ISB says IFRS for SMEs is not for the self-information of owner management. They say it's not a general purpose financial statements. It's not for the managers. It's not for the tax. And it's not for other things, as you said already, not for disbursement function. It's just a little piece out of here. And that's the reason why a lot of people say this is totally in conflict with the traditional approach of accounting. So if the IFRS for SMEs would be accepted, were accepted, it would lead to a considerable change of the entire traditional accounting framework and system. So the question is this really worthwhile? Why should we really make this step out of our system? What are the benefit issues? There is a lot of cost issues, or a lack of internal comparability, because then internal comparability would mean that some of the company have national GAAP, which is pretty much prudent, conservative, then IFRS for SMEs, and then again full IFRS. There are quite a bit of constituencies saying, why shall we have this IFRS for SMEs if there really is a need for international comparable information of those SMEs? Then they should deal with full IFRS. So this differentiation between IFRS for SMEs and full IFRS is not that well understood in the German environment. So then I also wanted to show you how the legislator reacted to this situation. So the governmental activities always have been, for the last, I would say, 12, 15 years now, very reactive. So they didn't make per se a step forward. The last time, or the only time when they did it, was in 2009, as you will see on the next slide. Always conservative. When they made changes, they didn't make changes with regard to recognition and measurement. Always disclosure, and if they do, then also for consolidated accounts and for publicly traded companies, because this is totally accepted. Publicly traded companies are on the international capital market. They should speak the international language. This is full IFRS. It's not IFRS for SMEs. And step-by-step basis, so we have had for the last 15 years 8 revision acts, so step by step, if something comes from the European Union, European Commission, then it's transformed. No political lead, so ever in a time of saying, okay, we need to change our system. For those of you who are interested in knowing what the way Germany has transformed the IRS regulation, so for sure they had to require it for publicly traded companies. They also introduced an option for IFRS for all the other consolidated financial statements, because it's just information function. It's no function to calculate a disbursable income, but, and this is very, very strong, and the companies like Siemens, BMW, Daimler, they don't like that. They say we manage our company, we communicate with the capital market on the basis of IFRS, and you still require from us to present our individual accounts on the basis of German GAAP. Companies may present financial statement under IFRS for their single accounts, just for publication purposes. So they may give an additional single financial statements together, and this is important, together with the German GAAP financial statements to the official registrar. So this was this really quite revolutionary Bilanzrechtsmodernisierungsgesetz, Brunel Accounting Modernization Act. What were the major, really the major outcomes of this? So the motivation was to create a competitive alternative to IFRS and IFRS for SMEs. This was explicitly stated by the legislator. Regulator strategy, modernization, revision of the German accounting law by converging with IFRS, and now this is very important, as long as there are no conflicts with basic German accounting principles. With this Modernization Act, they have exempted small sole proprietorships that still, up to these days, still were required to present financial statements according to German GAAP. Those small proprietorships, they are now exempted. Small means in this term 50,000 euros of sales or 25,000 euros of net income. So really pretty small. So they don't have to deal with accrual accounting anymore if they don't want to. Considerable uncoupling, this is also something for you dealing with international accounting comparisons. So I wouldn't say, talking also with Hanno, that Germany now is a good example anymore for a strong link between financial accounting and tax accounting. Over the last years, this has been quite loosened and quite, as I called it here, uncoupled, primarily due to this Modernization Act, because somehow a lot of people argue that the fiscus, the tax authority, would like to do this uncoupling because they think that they might get more taxes if they have the tax system uncoupled than not. And you know, taxes are needed everywhere. Reductions of explicit recognition options. Some of the recognition options that were in the commercial code were taken out. Now, when we talk about IFRS, when we talk about accounting for SMEs, we always need to think about this differentiation concept. What is an SME and how is accounting generally differentiated? accounting rules. And in Germany we have got 3 differentiation criteria. So legal form, limited, unlimited companies, size, and not only for companies with limited liabilities like we are in Europe, but also for other legal forms. So large partnerships, sorry. Large partnerships are required to present almost the same financial statements as large limited liability companies. Because the argumentation is, as long as they are large, or when they are large, they have a much higher responsibility, and that's the reason why they should also disclose much more about their financials. And capital market presence, this came in by the IAS regulation that companies listed on a capital market are treated differently. They have to apply IFRS for the consolidated accounts, and they have also an enforcement regime. And what are the differentiation dimensions? It's recognition, measurement, and disclosure, but it's also auditing. So in Germany, for example, compared to, or in contrast to Finland, small limited liability companies don't have to be audited. Just middle-sized and large companies have to be audited. And publication. Yeah, also publication is very much differentiated according to legal form and to size. Those are the criteria. Here you see that Germany always has tried to take the highest thresholds, also to somehow protect the small companies, to have too large accounting obligations, requirements, and as I told you already, Germany has already transformed the micro directive into the law. Companies can apply it already. And those are the large, all the other entities, the large ones, you see if you are larger than 130 millions in your turnover or 65 millions in your balance sheet total and or more than 5,000 employees, you have to present financial statements as you would have if you were a company, limited. And this is how it was done by the legislator. So the structure is to put every accounting rule in the so-called third book of the commercial code. And then the first chapter is accounting for every legal entity. So for limiteds as well as for partnerships, sole proprietorships. And here you have got the basic rules, balance sheet, format and stuff like that. Then the second chapter is only for publicly traded companies. Limited liability companies. So this is the area where the EU regulation comes in here. However, at the end of the day, most of the measurement and recognition requirements are in here. Yeah. Here you have got some additional disclosure requirements according to the EC directives and so on, but most of the real things that matter for net income calculation, it's valuable for every company. Third and fourth chapter is for financial institutions and insurance companies and cooperatives, and then you have got a special act for those large partnerships then where you can read that most of the requirements in the second chapter are also applicable for them. I don't want to go too much into detail through this. I have got two tables here. You have got the charts. These are some examples looking at the IFRS for SMEs content and the commercial code content, and you really see that this doesn't fit. It really doesn't fit. So for example, deferred tax is no requirement for unlimited entities and small limiteds, and you have a general requirement in IFRS for SMEs. Financial instruments, only amortized cost, whereas under IFRS for SMEs you have at least quite a bit of fair value, and so on. You can go through this. I just wanted to, I knew that it will be a little bit more than half an hour to give you an insight, sorry about that, but okay, thank you. As I told you already, at the department of the University of Regensburg, we had from 2007 on 3 different research projects on IFRS for SMEs, whether it is perceived as attractive and so on, financed by the German Accounting Standards Board, and this was somehow also one of the reasons why they got blamed for doing this, so that it doesn't have to do anything with consolidated accounts. This is even not in the duty of the German Accounting Standards Board. Nevertheless, they finance this type of research. So Brigitte Eierle, Johann Löffelmann, and myself, we did these types of surveys. So the first was a survey in 2007 based on the exposure draft, and the second one was also a survey 2009, then already based on the final standard. So hard copy questionnaire samples 4,000 SMEs, and we had quite a bit, response rate is always pretty small if you do research with SMEs. So first one we had 10%, and the second one we had 8%. And the second survey in 2008 was because we also wanted to get to know how the users of financial statements, the primary users, the bank, think about all this. And we had more than 59 interviews with 32 different banks, so personal interviews. People, Johannes Löffelmann did most of them, went there and had a structured questionnaire and went through this questionnaire by personal interview. Those were the major 3 contents: general questions about the corporate governance of SMEs, how do they work, do they have primarily owner managers or non-owner managers, and all these type of questions. What is the role of financial statements? Then we went into the IFRS for SMEs and asked them whether they think this accounting method is appropriate or that accounting method is appropriate. And then finally we asked them about the attractiveness of the IFRS for SMEs. Well, this was one of the general questions. So how relevant were the following objective of preparing separate financial statements? So what do the SMEs, this was the study in 2007, what do the SMEs perceive as the major objective? You see taxes is still in the far front, so the yellow one is high or very high information to owners, self-information even, if they are owners, managers, information companies management. So this is pretty much here is special information for companies management. It's not in the scope of the IFRS for SMEs. So information potential investors, no, 81% said we don't have this. Information for customers, even 70% said no. Information for employees, also in this small SME area, they also don't think that the financial statements are interesting for the SMEs. But here, profit distribution, even the companies have the feeling that profit distribution is very important. Then we for sure ask also the question, do they have foreign activities? If they're in need of international comparison, and here you see that foreign competitors is no by 71%, foreign subsidiaries. Borrowing abroad is not an issue that much of German SMEs. However, here again, the export country, at least 45% said it's a high or very high relevance for them external, so foreign exports and also imports. So this was the study in 2009. I apologize for the small writing here, but hopefully you can read it in your handout. So here was the question, which financial statement does your company prepare and which accounting standards are used? Here you can see that for the separate financial statements, single accounts, 90% used German GAAP. This was quite interesting that there even 8% that they use IFRS. we all thought that they might not have understood the question correctly. This is always the problem of surveys, because legally spoken, they have to present their financial statements single according to IFRS, according to German GAAP. And consolidated statements here, you can see that at least also 18% used for the consolidated statements IFRS, and most of them said consolidated financial statement of parent, that is, here, financial reporting packages. Most of them used IFRS, 24% just for group-wide or internal group requirements. So here was the question, how would you assess the need for an entity to provide internationally comparable accounting information? And we put it here in this chart in relation to the rate of exports, because we thought that those companies that have a lot of export activities might perceive this need on a higher level. And you can see that companies, and there is a size effect, companies that have a high or very high relevance of foreign exports, say 18% they see a higher or very high need for international financial statements. Yeah, but in average, so overall those with little exports or moderate exports, overall there were 12% who said, we think that there is a need for international comparability. This is interesting. We also asked them how relevant are the following reasons for your entity for providing internationally comparable financial information. So at least, as we said, 12% said all over the whether export was relevant for them or not. At least 12% said yes, we think it has a high relevance. But if you look at that, requested by parent company is the strongest factor here, 58%. So somehow this is not, you don't see the explanation. So 55% says, even so, those companies say no, up to rather low. So this blue, the light blue says no, and the dark blue says yes. So requested by parent companies, 3% said yes. This is primarily requested by the parent company. Facilitate the preparation of consolidated financial statements was also said, internationally oriented, and increased transparency also was mentioned by 27%, that this is an argument in favor of this international comparison. Then at the end, we also asked them about how do they think about the attractiveness of the IFRS for SMEs, and we have now merged this with the knowledge of the IFRS for SMEs, what we also asked them, and you see that those who said we have a very good knowledge about the content of the IFRS for SMEs, those were only 4, but they said no, we don't think that we are willing to apply this standard. Those with good knowledge, only 70% said we would like to apply the standard, and with very low knowledge, even those that had a very low knowledge of IFRS for SMEs, still 8% said, it could be that we are going to, or that we would like to apply it. Which conditions must be met? This is also, this is the last chart of the company survey. Conditions must be met that your entity would apply IFRS, and here you see that the frequency of change is also something that is feared by the SMEs, or they said if it were accepted by the banks, then perhaps we would think that it is more attractive, accepted as basis for determining taxable income. Sure, if you could file your tax statements on this basis of the IFRS for SMEs, it would gain quite a bit of attractiveness. Now three I think charts on the bank survey. So these are now the questions given by the bank guys who were responsible for financial analysts and credit ratings. So those are really people who deal with financial statements from the bank side every day. And though here was the question of the following qualitative information categories do you regard as one of the three most important? And here you see that the financial statements are by far perceived as the most important information basis or instrument for quantitative information. And now we ask the banks, and this was very, very interesting, we asked the banks whether they think that there is a need for their customers, so the companies, to have internationally comparable financial information. And it's more or less just by 2 or 3% the same answer as the companies gave. So this was quite interesting. So most of them said little need. So but high need only if you take high and very high, so we're 25%. And if you look at the chart of the companies, then you see in average it's only about 12%. So the banks really assessed it as much more important than the companies did. Could a special IFRS 4E be of an advantage or disadvantage for the credit standing analysis? And here you see that most of the banks said, no, it's a disadvantage, and only 24% said it would be an advantage. Advantage, increased comparability. Disadvantage, preparations is too expensive. And further disadvantages, complexity, too many implicit accounting options. Again, too many implicit accounting options, one of the major arguments against IFRS in the continental environment. Too less importance of prudence. And this is the last chart of our bank survey, and this is one of the most interesting ones, I think. They were asked just assess the information benefit and effort to analyze. So we didn't just want to say cost. The information benefit and effort to analyze would be the cost. How much manpower do you need to invest in analyzing an IFRS financial statement? So this was focused on IFRS. And here you see that German GAAP is perceived, 61% said, okay, yeah, you have got it high. 61% said a high benefit. However, still 73% said it's a moderate input, yeah, moderate effort. Here you can see that if you take very high and high together, it's all perceived as quite beneficial, IFRS. So almost 50%. However, the cost effect also is perceived to be much higher. 47% said very high cost, very high effort to analyze those financial statements, and 20% said high. So from the user's point of view, from those banks, they say IFRS gives a quite high benefit, but it's much more costly to really analyze those financial statements. So this is the last slide, conclusions. It's just a summary of what I've said. Perhaps the effects are very important. Reluctance of convergence with IFRS with regard to measurement, recognition, and disclosure. Clear conflict with IFRS for SMEs, this tradition. I hope that this became apparent. Fear of potential negative effects on the business, the users, and the entire economy, and strong lobbying on the international and European level to avoid a requirement to use IFRS for SMEs, and also IFRS for other than publicly traded companies in consolidated accounts.